Hey everybody, welcome back to Stock Ventures. Today we're going to be talking about taxes on stocks. So keep in mind when you do your taxes, you're only going to be charged taxes on stocks that you sell. Normally you file these taxes in April, and through your brokerage account, which means whichever account you use to trade stocks in, they're going to provide you with a form called the 1099B tax form. This tax form will be provided by February 15, and they must do this by law. So now what's on your tax form? On this tax form, they're going to list the capital gains and losses that you made for the year. They'll give you this either by mail, or if you do not receive it in the mail, you'll be able to access it within your own brokerage account. So very simple. Once you get this form, give it to the person who does taxes for you. They'll know what to do with it. And if you do your own taxes, you can use the 1099B form to do your taxes and done. Now, one thing you guys need to know about taxes is that they are very dependent on your overall income, because if you make a lot of money, they're going to charge you more taxes. If you make less, you might even get 0% on whatever they want you to pay in taxes. So that's very important. So now, because we live in California, we have the highest state tax, not federal tax, highest state tax, which is 13%. This isn't like a huge percent. So out of $100, they'll take $13. It's not too bad, but that's the maximum. They can charge way less. And like I said, it's dependent on your income. If you make between $40,000 and $100,000, you might be only taxed 1 to 5% for state tax, not the full 13%. So keep that in mind. And now, if this is all confusing you, I'll do my best to explain it all much better. And at the end of the video, I'm going to share a huge secret that will change your taxes worried life. So stay tuned for that. Now, how much will you be taxed on your gains? So one important thing to know is that there's taxes on short-term gains and long-term gains. Short-term gains will be applied if you buy and sell a stock in less than a year. Short-term capital gains will be taxed at the percentage of your overall income. For example, if you make under $40,000 for your overall income for the year, you're going to be paying about 12% of taxes for short-term gains. If you're married or you file jointly with someone else, this can increase or decrease. It just is dependent on your status. So tax rates may vary depending on your filing status, and that goes for long-term capital gains as well. Short-term tax rates will vary depending on how much money you actually make. It may range between 10 to 37%. So basically, to say it all in like one sentence, if you make more money, you pay more taxes. If you don't make a lot of money, then you pay less taxes. Short-term capital gains taxes are much higher than long-term capital gains. This is why I really recommend everybody is a long-term investor. Now, if you're like me and you're thinking, ew, I don't want to pay short-term capital gains taxes, they're simply way too high for my cheap self. I would love to be a free person from taxes on my gains as low as even 0%. Well, there's this thing called long-term capital gains taxes. If you buy and hold a stock for more than a year, then your gains will be taxed at a much lower rate. And this can range anywhere from 0 to 20%. What? You can be taxed less? Yes, you can. This is why I encourage a lot of investors to hold their stocks longer than a year. Taxes suck. If you can pay less or even 0%, then why not hold for longer than a year? Most of you watching probably need to save your money anyways. So here's how it works. If you make less than $39,000 a year, then you will pay 0% on long-term capital gains taxes. Remember at the beginning of the video I mentioned federal tax and state tax? Well, the federal tax is what I'm talking about when I say capital gains tax. State tax is separate. State tax will still be at a maximum of 13%, but remember it can be lower dependent on your income. Now, one important thing about long-term capital gains taxes: if you make more than $40,000 a year, then you'll be taxed 15% to 20%. Now, keep in mind, short-term capital gains taxes can go up to 37%. Long-term capital gains taxes can go at a maximum of 20%. So it is definitely a lot better to hold your stocks for more than a year. You'll keep a lot more of your money if you hold it for long term. Some final key takeaways for you to never ever forget is you only pay capital gains taxes on stocks that you sell. If you go a year and do not sell a single stock the entire year, then you pay nothing to Mr. Uncle Sam. You only pay taxes when you sell it, and if you held it for longer than a year, then you will just pay the long-term capital gains tax. Now, one question that I've had for a while when I first started investing was, what happens if you buy, then sell a stock, but you leave the money in your investing account, meaning you did not withdraw any money for your stock, you just kept it in your broker account? What happens? Do you pay taxes on that? Well, the answer is yes. You sold the stock, therefore you will be taxed on those gains. Now let's say you buy a Tesla stock for $100. then it goes up to $150 and you decide to sell it. You now made a gain of $50, but you decide to buy a Tesla stock again that same day for $120. The question is, will you be taxed on the initial $50 gain? Or since you reinvested $120, will you be taxed only on the $30 that you have left over? And the answer is, sadly, you will be taxed on the initial $50 gain. You cannot try to trick Uncle Sam into only taxing you on the $30. You will be taxed on the $50, and since it's a short-term gain, you will be taxed at the range of 10 to 37% for short-term capital gains taxes. One more thing, if you lose any money in the stock market, you can use those losses to offset gains. Meaning if you make $100 but you lose $50 in a different trade or whatever the way you lost another $50 while trading, you can offset the gains and only pay taxes on $50. So I hope that made sense. If you make $100, lose $50, you can subtract that, and meaning you would only gain $50, so now you only pay taxes on those $50. If you made it this far, remember at the beginning I said I would share a secret with you. If you suck at math and are super lost and did not understand a single thing in this video, but you want to know how much you're going to pay in taxes for your stocks, there is a capital gains calculator that I will link below that does all the work for you. It even shows you how much state and federal tax you'll pay on your gains. So that's the super secret that will help you guys out with all your tax worries. Thank you guys for watching. I hope you guys learned a lot. And if you think I deserved it, please leave a like and comment. And also, if you have any questions, comment below. I'll do my best to answer all of them. Thank you. And I hope you guys have a great stock venture.